Most people panic during crisis. Inflation rises, interest rates change, market correct, and fear spreads. And when the crowd panics, many people make emotional decisions. But the smart investors think differently. For the uneducated, crisis is only fear. For the prepared, crisis is information. One of the biggest mistakes people make during crisis is reacting too late. They ignore risk when everything is good. Then they panic when markets move. Smart investors do the opposite. Welcome to the New Wealth Coach Show. I'm Abdallah Harfouch, founder of the EcoLearn and Alpha Universe Group, investor and entrepreneur. Today, we are talking about how smart investors think during crisis. Most people panic during crisis. Inflation rises, interest rates change, market correct, currencies move, news becomes negative, and fear spreads. And when the crowd panics, many people make emotional decisions. They sell without a plan. They freeze. They stop learning. They only ask, what happened? But the smart investors think differently. They do not ask what happened. They ask, what is being repriced? This is a very important mindset because crisis usually changes the price of assets, risk, liquidity, currencies, and even expectations. During inflation, purchasing power is under pressure. During high interest rates, borrowing becomes more expensive and many assets prices can be affected. During recession fears, investors become more defensive. During market corrections, weak hands often panic, while prepared investors look for value. During uncertainty, liquidity becomes powerful, and during global stress, safe haven behavior might appear in assets like gold or certain currencies depending on the situation. The difference is education. For the uneducated, crisis is only fear. For the prepared, crisis is information and opportunity. This does not mean you should be reckless. Smart investors don't jump blindly during crisis. They study, they wait, they compare prices, they understand risk, they manage liquidity, they avoid emotional decisions. One of the biggest mistakes people make during crisis is reacting too late. They ignore risk when everything is good. Then they panic when markets move. Smart investors do the opposite. They prepare before the crisis. They build knowledge. They build cash reserves. They understand asset classes. They diversify. They know their strategy. So when crisis appears, they are not shocked. They are alert. They do not see crisis only as destruction. They see it as repricing. And repricing can create danger, but it can also create opportunity. The seventh wealth code is this. When the crowd panics, smart investors don't only ask what happened, they ask what is being repriced. Crisis rewards preparation, not panic. This was our episode for today. Make sure to go to the description and join our free community for free content also. And make sure to wait for episode number 8.